March was boring, April could bite, and at the risk of sounding like a broken record or a scratch CD or whatever the Spotify kids called repetition, yes, I'm still bearish. Now, some might say I'm stubborn, but I say I know a pattern when I see one, and while March was about as exciting as watching paint dry in a slow motion on a frozen chart, April's already teasing a shift, and we're starting to see some profits rolling. Let's look at the charts. So we're middle of the week and the scenarios are, again, they're not different to what I would normally go through. Again, I'm looking for a bullish, bearish and neutral scenario. Now, the neutral and bearish scenarios are probably going to be the same. We're remaining between my 5700 and 5500 kind of bull bear triggers. I'm looking to be bearish again as we rally into these moves higher, and I'll see if I can compound into the swings if we go through 5500. Now the bear boots will be off, and obviously if we go through the 5700 trigger, that would basically signify that, okay, well, the bear scenario is not working out. I need to unwind anything that I've got there and start thinking about the bullish program, as this bear flag is really what's dictating how I'm looking at the charts for the moment. Let's not discount the possibility that this could turn into a double bottom, and the talking heads are already losing their shit over this. My failure point for the bear flag, as we've just said, is 5700, which is why I'm going to be bullish above 5700. That would be the kind of trigger point for the bull scenario, the double bottom essentially, and certainly it's going to be confirmed if or as we push above 5800, the apex of that V. I'm using the 5700 mainly because that was the start of Friday's big bearish breakdown, so we'll see if that can act as an early opportunity to start driving the bullish scenario should that start to unfold. So don't let boredom trade for you. One of the most common traps to fall into is forcing trades when the market isn't doing anything. Patience is a position, or doing nothing is also a perfectly valid trade idea. Waiting for clarity is a valid strategy. I didn't force anything through March, and I'm better for it. So the setups still work. It's just maybe there's going to be some less frequency of opportunity when the market's quiet. Your system isn't broken, it's just the market, it could be asleep. Now, the pros aren't hunting for trades every day, they're waiting for ones worth taking, and that's how the SPX system works, with clear triggers and no second guessing. Here's a fun fact. Did you know the month of April is historically one of the strongest for the S&P 500, averaging 1.5% since the 1950s? But guess what? Most of that strength happens in a strong March. So when March is slow or bearish, April tends to flip that script. So don't be surprised if volatility starts to roar back. Just be ready, as we've discussed earlier. Pick your lines in the sand and, your bullish and your bearish triggers, and always be prepared to have a change of scenario. And if you'd like to learn my proven profitable process for pulling profits, oh, there we go, wasn't expecting that, then click the link next to this video. You'll be taken to a free training where I outline one of my favorite money-making patterns. It's the same pattern that I used on yesterday's trade to pull a 90% return out of a day trade. So click the link and I will see you over there.